Hi, my name is Amy. Thank you very much for watching, and let's make some bad financial decisions together. This is for entertainment purposes only, so if you're entertained, please like and subscribe. I really appreciate that. So I have reacted to this video from Ambassador of Kwan, and I didn't realize that I did this thinking it was going to be a part of yesterday's video, but I didn't realize that it was going to be an hour long, the part where Howard was speaking. So please enjoy that. But before we do that, I really love to thank my members. And what I've been doing is giving you all a ads-free version of this. I double-checked YouTube because I don't actually go in and manually do my ad spots. I just let YouTube do what it does automatically. So I don't see a setting where I can say like, hey, ease up on the ads. So I really do apologize for the amount of ads people have been seeing lately, but I don't know how to fix it. But if you become a member, I've been doing an members only version where you can watch it ad free. And eventually you'll be getting more off-brand Amy videos, and those will have an unlisted version so that you can listen to it in the background. Anyways, Paulette Pierre, Scott Behringer, Michael Holiday, Shane O'Mac, Bill Brandt, Patriot Spalding, BGP Automotive, In My Opinion, Jetta, and America Werewolf X. Thank you all so much for being my members, and you're really helping make this channel and YieldMight more sustainable for me to do full time. So, also, you're going to hear me say, I was so sick, I didn't give a crap about any of this. What I really meant was like, I've been very consumed in just being better, healthy for myself. And so I haven't really been focusing on income. Like, a healthy man wants a million things, but a sick man only wants one. And all I've been wanting to do is focusing on getting healthy. That's all I meant. Anyways, let's watch that reaction channel because it's already going to be a hour long, and I will talk to you all later. So I didn't know about this space until I opened up my X account and I saw that it was happening, but I got there at the very end of the conversations. I didn't hear anything that Howard has said yet, but it sounded like it was an interesting conversation. And the Ambassador of Kwan invited me up to speak. And I was just like, yo, I am so sick. I don't even give a shit about any of these things. I feel like a person that has like had a book report due, but I haven't read the book yet. So we're catching up now. But I do appreciate for KYLD that it is a basket of funds, that they are focusing on high income. I just don't know. The only way for me it would actually compete with Ulti is if it does have a high enough yield, because that, like, I can't have a high income ETF that's only paying me 20% and call it an Ulti killer, because that's just not going to work out for me. It doesn't mean it's not going to be a good fund, but it does mean that if you're going to go after Ulti, you have to have a high enough yield and for it to be different enough that I feel comfortable investing in it. So I think Howard is about to speak here. But yeah, we're just really happy that now ULTI and KYLD are here, and so we have more variety and more things to compare to each other and we have a choice about which ones we think is better for us.
Here, gonna go invite Max on up. Appreciate you all for showing up this morning and taking some of your time and treasure to get educated, to learn more, and be able to make great decisions for yourself. Let me go through the panel first here. Unfortunately, Parabolic had a little bit of I won't say difficulty, but stuff this morning. So I'm not sure if she's going to join us as a co-host. She might be a listener, but we'll pray for her and hope it is. First and foremost, I just want to say thank you to Howard for coming in this morning. He's a West Coaster, which means it is like before coffee o'clock. Howard, thank you so much for popping in today. How are you?
I'm doing well. Thanks for everybody for joining. Thanks for inviting me to be here. It is very early, but I'm excited.
This might actually be the closest I ever get to inviting Howard. Who knows? Maybe someday he'll reach out to me and we'll actually have him on the show.
Oh, well, we're excited to have you. We're so grateful, and in such a time as this.
Also, the Ambassador of Kwan is an excellent interviewer. So, just put it out there.
Where an individual like yourself who is spinning up these ETFs, who is looking out for the retail traders and making sure that we have great options, to come in and spend time with just a guy like me and our panel and share with the community. We just feel so very blessed, and words fall short of being able to say thank you so much. It looks like you had a nice opening. I couldn't see exact numbers, but it was definitely over $2 million cash inflow. Is that right?
Just shy of that. Yeah, about we had 4 creates since we launched. So that's thank you for everybody. Everybody's on here. I guess didn't go out for Halloween yesterday.
Yeah. All right. We're going to get started. Howard, please, you don't need to ask to speak. Anytime we're saying anything, you want to pop in and give some clarifications or make sure that we know what's going on. Please just unmute yourself and go ahead. But I want to go around the panel and make sure everybody's doing well. ETF Delta, how was your Halloween? And thanks for being here this morning and all the work you're doing to prepare.
Yeah, good morning. Rainy and cold on the East Coast, but good Halloween nonetheless, and excited here to talk about all the exciting news from yesterday with both of these ETFs finally coming online and some competition heating up.
Yeah, it's definitely nice to have menu selections and allow meritocracy to live. ETF Inspector, how was Halloween with the kiddos yesterday?
Hey, good morning.
Yeah, I mean, that's a really good point about the meritocracy and just giving people the options for what their risk tolerance is. Because when there's only one thing in town, we're all going to go do that one thing. But, now people have had time to observe in the real world how some of these funds work. And so hopefully we're going to get iterations that work better than previous iterations.
Not bad. We live on a little street out in the woods, so it's pretty quick for us, just down and back, and I got to be done. They went over to a friend's neighborhood to go extend their collecting, and then I got to teach them why we don't like taxes.
Nice. Yeah, I live somewhat out in the woods here, but we have a neighborhood, sort of, so to speak, here. We live on a cul-de-sac, so it was amazing. You'd see trucks pull up with flatbeds in the back, and the flatbeds would have.
So I didn't do Halloween because I live in the countryside, but my mom and my nephews are here, and so I asked them about their Halloween, and my mom told me about, because they went to this really affluent neighborhood, and so apparently everyone got a whole candy bar, but then they got to play pachinko to see if they got another small bar or a big bar. But apparently those people also had a huge truck of food, and they were telling the parents hey, no questions asked, just if you need stuff, just take whatever you need. And I thought that was very amazing of those people. But then my mom was like, yeah. And then my niece took a thing of Pringles. I was like, you don't need food. That's not for you. We're not food insecure. But then my nephew was trying to say that they're poor, and we're like, no, you don't know what poor is. But, it's fine. It was just a fun little story. Anyways, let's go on.
Like 20 or 30 people kind of sitting on them. They'd all jump off and then run around the neighborhood. It was a lot of fun. Had a good time. Max, how was Austin? Everybody good and settled there for Halloween?
Yeah, everything's going well. I didn't have any. I went and got some candy, and no one ended up showing up. And I was just griping to the guys in my Discord that I couldn't sleep well last night. But I remember I ate a bunch of freaking candy, right before bed. So it probably made, I'm paying for it today. Let's just say that.
All right. So what I wanted to do is go ahead and welcome everybody officially to our space. Thank you for joining so much. The purpose of today's space is to kind of go over the two ETFs that were spun up yesterday. One from Kurv, that's ticker KYLD, and one from Rex Shares, and that's ULTI. But before we jump in, a quick reminder, everything we discussed today is for educational purposes only. None of us are providing personalized investment advice, and investing always involves risk. Please do your own due diligence and seek professional guidance before making any financial decisions. So with that, I just wanted to say over the past few years, the income-generating ETF space has really transformed. As recently as in 2018, we only had about 10 derivative income ETFs. That's because the rules changed and they allowed it to come to market. But since then, we have grown from 1 billion AUM in these kinds of funds to over 100 billion in these kinds of funds. And I am not shy to say, I think a lot of that came from retail investors like the folks here listening in the panel. In parallel, the market has seen hundreds of new actively managed ETFs launch in recent years, over 900 of them in the past 12 months alone. So as you can see, it has expanded dramatically. There's a lot of excitement, but there's also a lot of confusion because they've spun up, lots of them going with different kind of derivative actions, different strategies, different ways of making income. And all of this means one thing, increased opportunity, but also, I just can't say this enough, increased responsibility for you as the individual investor. You're trading your most precious.
So actually it is interesting to hear these statistics. I have not been paying attention, honestly, and I don't even know where to get those statistics to verify it. But personally, I think, saturated is probably not the correct word, but it's getting harder to differentiate between these. And so when we do have unique ones like KYLD and ULTI that come out, they deserve to get hyped. What can I say? So, and ULTI is definitely going to get its own video.
Asset time. Most of you have swapped time for fiat currency, which you've then invested in these. So you have given up time and treasure to be able to do this. It is so important and so imperative that you all understand what you're getting into, make good choices for you and your loved ones. And that's kind of why we do this. We do this to make sure that you have the best opportunity to be able to make good choices for yourself and your loved ones, and then put your fiat money that you've traded time for to work. So today we're going to go over the tickers. We were going to start with Max and ULTI, but since Howard has been so gracious enough to give up precious sleep to pop in here, I thought we'd let him go first and just kind of introduce his fund, tell us how it went, and any highlights before we get ETF Inspector to get into the nitty-gritties, and then Howard can comment on any of the trades and items that ETF Inspector wants to talk about. I hope that's okay with everybody. Howard, you have the stage and the floor.
Okay. Well, first of all, thanks again for.
Oh, Teddy is definitely very excited to hear from Howard. You can hear them growling in the background. I swear, these dogs, they growl at each other in their sleeps, and they're like, "Don't touch my bone," but like they're both literally asleep. She doesn't care. She's on the floor. She's unconscious. Okay.
For everyone who, at least, when we posted the launch of the fund, it was one of the most viewed posts that we have, and this has actually been the first day trading shares of an ETF that we launched at the highest. I think 84,000 shares was traded on the first day. So thanks for everybody who contributed to that. We filed this actually a while.
Oh, it definitely wasn't me contributing to this. I was in Coronado. I kept hearing like little things about this, but honestly, I'm a little overwhelmed with YieldMight right now, so I'm like, no more new funds. I don't want to know anything about this.
While ago, because this is our 10th ETF, and for those who have followed us for a while now knows that we're actually very particular. I know on the Twitter sphere, I guess the X sphere now, the people are starting to put together league tables and compare with us with other offerings, etc., which is fine. But we've always kind of managed our ETFs in our own way, and what we want to do is deliver consistent distribution with some price appreciation. If you look at all of our strategies, we list them all at $25. Every one of them is close to $25, if not above that, very much above that. The one that's, I think Apple is like.
I really appreciate that $25 price point. Honestly, I don't know why, but these high income ETFs, I feel like they should be cheaper. I don't know, like at $25, I can buy a whole share. At $50, I kind of have to think about it. But yeah, trying to keep it at least the $25 or around that, I do appreciate that, Howard. And if we can get KYLD and have it pay an actual nice high income, I'd really appreciate that.
$24.85. That's because we just did a distribution. So hopefully now, I think 2.5 years in, people kind of see our style and know that there's a particular way that we manage our ETFs. So KYield is no different. It is the most, I would say, unconstrained version of what we do. The last most unconstrained version is KQQQ. It does take us a while to get to, I would say.
KQQQ is actually a good fund, but I never talk about it because the distribution's so low. That doesn't mean it's not a good fund. It is actually a pretty good fund.
Cruising speed on our strategy. When we first launched KQQQ, or I should actually say Kurv Tech Titan strategy, we spent some time to get NAV stability. And then once we've hit that, the strategy really have worked out. And, for that particular strategy, the distribution's about 18% and it's outperforming QQQ, right? So that's our goal. There isn't a benchmark per se for this one, but our goal is to have, this is in its name, high income, but we also want NAV stability. So the way that we think about the strategy is that, in the Tech Titans, we're constrained to companies that are related to technology. This one is unconstrained. So we look in the universe of things that we think, and these are the various different components that we think about, is first, we look for names that have very high implied volatility, but not the highest, because sometimes when you have the highest, it doesn't have any liquidity. That's an issue. So we avoid things that don't have liquidity because there's wide bid-ask spreads. those costs ultimately get passed down to the investor. So we don't want those. Then we look at names in which we think there's high growth potential. Dominique Turson, myself, Dominique's the PM. We look for names that where we think there's some sort of catalyst in order to generate high growth and high earnings. We don't just buy anything that the market says. It also has to be a business that we can understand how they generate their earnings. So you'll see in our portfolios,
See? The first rule of doing options is investing in high quality companies. Things that you understand, things that have good fundamentals. Yes.
Names that I think are easier maybe to understand because there's sort of an investment thesis. And largely, they have to have already been generating earnings already. There's a few exceptions. I'll kind of explain why. And so that's how we really construct the portfolio. And lastly is that this fund will be a lot more tactical than a lot of our other funds. So I'll kind of maybe go into each one of these details so you can understand the style. For us, the most important thing is not necessarily to beat a competitor. There are definitely other names that could go up 100, but if we don't understand it, or if it can go up 100% but go down 100%, we also try to avoid those because, for NAV stability reasons, right? So that's the style that we run. We want to generate, the goal is we want to generate high income, consistent, and have NAV stability. So going into launching the ETF.
I'm going to note, though, they did not write NAV stability into their prospectus. So there's no written rule that they have to achieve NAV stability, but you can tell that they're serious about NAV stability by their track record of the funds that already exist.
This is sort of like backstage stuff. We wanted to launch in October. We ended up, the timing was sort of, last 2 days of October, which is an odd time to launch this because this last week was all of earnings. So we wanted to avoid certain things. So again, if the earnings are terrible, that does not lead to NAV stability, but we do want to take certain opportunities. All right. So right now in the portfolio, largely from a construction perspective, there's 5 themes that that's in the portfolio. The first is a sort of a second derivative to a debasement trade. So as you guys know, gold and silver has been going up a lot, right? Fear of government shutdown or fiat debasement, etc. So gold has gone up.
You know what else has different themes? Granny shots. How's Granny doing? Yeah, they have short term, long term, so I guess they have 7. So they have less themes than granny shots. But granny shots are doing the style, seasonality, PMI, energy, millennials, labor suppliers, and finance. So, this is not about granny shots. We'll go back to doing this. But, yes, definitely the debasement. So he's talking specifically about the GDX holding.
Now, a little bit less than $4,000 per ounce. But what we view is that this is actually, in the short term, extremely good for mining companies because what they've extracted out of the ground was much less than that. And then the market their products that they're selling is much higher than that. So for at least for the next quarter or two, they're going to have extremely good earnings. So that's sort of what we call the precious metal theme that's happening in the market. The second one is we have the same theme in Tech Titans, which is the AI infrastructure. We continue to believe, although it's starting to get a little frothy, there is going to be the demand for AI outstrips the supply, specifically in the infrastructure space.
When people say frothy in the market, do you picture it being like a coffee frother or like the sea turning frothy? Just like mentally, what do you get with the frothy?
So that is typically the cloud providers, the chip makers, or the real estate play, which is the data centers, right? So you can see in the portfolio names like Broadcom, AMD, Teradyne, Vistra. That's all within that particular name. Now here, I want to make a contrast between here and Tech Titans. In Tech Titans, you can see we have some of the similar names, but we have bigger names like Microsoft, NVIDIA, right? Those are what I call core, right? But in this fund, what we want to look for high growth. So these are actually the smaller names because if they're able to make contracts and catch up with NVIDIA, they have a higher growth potential than NVIDIA. So see, this is the difference between this strategy and Tech Titans because we're looking for higher growth opportunities, right? So that's a component of this. The third theme we have is part of a debasement trade, but largely just from a crypto Web3 perspective. We think that it's going to still continue to grow. So you'll see names like Galaxy, Coinbase. We love when we have rails, rail business. So, you're not hauling things, but you're part of the rails. You're taking a profit from everybody who's traveling on top of the rail, right? Like the App Store. Those are businesses we like. So you see Coinbase, Bitmine, even the Bitcoin ETF. Okay, that's in the portfolio, right? I'll describe to you. Most of these holdings are in securities, but that particular one we did it synthetically. I'll explain a little bit why later. The fourth theme is sort of, I would say, kind of defense or government supported, companies. So you can see that in Helmet and BWX. There's one name, Intel in particular, is sort of the cross between different themes. It got invested by the government, and it's sort of an AI infrastructure play. So that one has particularly done well, and we actually think it's going to continue to do well because I don't think at this point the government's put in a lot of money in it. It's probably not going to let it fail, right? And then the last one is what we call companies that have network effects. So these are the Reddits, the Robinhood. That's also sort of a Rails company. Shopify, another Rails company, right? If you want to sell things online, you don't want to have a brick.
Okay, I would have used the shovel analogy. Like they are not like they're. I guess I don't know. Now we're just nitpicking, but yeah, they're kind of meme stocks, but yeah, they have more momentum. And they also, like he's saying with the Rails analogy, where it's like they're assisting others to get to where they're going. They're not necessarily the thing. Maybe he's explaining it better.
And mortar store, Shopify is where you go, right? Roblox, app loving, and etc. So those are the 5 core themes that is in the portfolio. Okay. Now, because we were launching this ETF near earnings, we actually did not write a lot of options on names that were announcing earnings because we wanted to wait for earnings If it was below expectation and it fell, generally implied vol would go up. That's when we would maybe write more options. So you'll see probably next week the portfolio will change or have more positions because we're now a little bit over earning seasons. So where we're starting day one, actually today's day two, Friday's day two, is going to change a little bit. Yeah. Now, I mentioned.
Okay, so we're gonna have to wait. We're probably gonna have to wait 3, 4, or 5 weeks to see what is an average distribution from KYLD then. And it is good that he's warning us that, hey, it was earnings season. It's an awkward time for us to be launching. We didn't want it to launch and then fall like a lead balloon, which I can respect. But, if it's a high income ETF and you're only making like a 15% yield, we're going to have to talk. Okay, Howard? Just saying.
Mentioned two things that is a little bit particular to this portfolio, which is we're going to be more tactical, and we did a synthetic on Bitcoin. All right. So if you take a look at Friday's holdings, there is a call on Amazon. That's actually already gone from the portfolio. The reason we did that was because earnings was on Thursday night, and we seeded the fund Thursday, so we had a decision to make. And given what we've seen with the company, and again we think that the demand from all of the other companies that have reported, we believe that this was going to be a really good earnings for Amazon. But Amazon's a core name, right? It's in tech titans. Amazon's probably not going to grow 200%, right? So for us, that was a tactical positioning. So we wrote a call because we think earnings was going up. So we're going to take advantage of the price appreciation that could happen after earnings. Fortunately, we were right. Amazon was up 10% after earnings, and you'll see that had contributed to portfolio performance on Friday. The last bit of piece that I want to mention is the synthetic on a bit.
Oh, Howard, you degen. I am so proud of you for making a bet. You didn't know for 100% certain that Amazon was going to go up, but you made that bet anyway, and we all won.
Bitcoin ETF IBIT. So all of these so far that I've mentioned are all securities, right? And then we will do sort of option strategies on top of the securities. The one thing that we did it via synthetic is the IBIT ETF. And the reason for this is because we're thinking about taxes at the same time. So for those who are more familiar with structures of ETFs, there's actually two types of legal structures for ETFs. There's a 40 Act ETF, which is what KYLD is. And then there's a 33 Act ETF, what they call a grantor trust. These ETFs are used to hold things that are not securities. So if you look at gold ETFs, silver ETFs, all of the Bitcoin ETFs, Bitcoin, gold, they're not securities, all right? So in order to hold them, they put them in a 33 Act ETFs. Both basically non-securities, so this includes if you hold gold or Bitcoin or these grantor ETFs, they spin out what IRS considers bad income because they're not considered securities. However, options on these ETFs are considered securities. So securities generate good income, which means you get capital gains. Bad income, you're taxed whether it's realized or unrealized, etc. So we want to generate good income for the portfolio. So that's why for IBIT, we did it through synthetic. So that means
they did write their prospectus in such a way that they can do synthetics or own the underlying, depending on whatever. And I'm so glad he explained that and that he understands the taxes. And a part of their prospectus is that they want to be the most tax efficient for us as possible. So I'm glad he explained why he was doing that, because even I mentioned before that IBIT's basically the only synthetic they have in the portfolio right now. So I didn't know that the IRS had good income and bad income. Our tax system is way too complicated.
It's a long call, short put of the same strike, and that gives you the economic exposure of owning the ETF. Except now, because options on these ETFs are considered securities, these will generate good income instead of bad income if we held the ETF itself. So I'll hold there. I've been speaking a lot, but happy to answer any questions.
That was perfect. I couldn't have scripted that better. I thank you. I'm going to turn the floor over to ETF Inspector because he was going to be looking at KYLD. I'm sure he has a few questions, and we can go from there and see how it is. Also, I want to say anybody in the audience that has a question, Howard is here. ETF Inspector has broken it down granularly. Please hit that little button, either ask a question or raise your hand and come up on the stage. ETF Inspector, it is all yours right now.
Thank you, Ambassador. And thank you, Howard, for the explanation. So you actually did a better job than I would have done kind of introducing the fund, and you spoke to what's in it. So I'm going to kind of switch over and more just ask a couple questions rather than go back through and talk about what's in it, since you already did. So right off the bat, have you guys picked what I'm sure you have, but have you announced what is going to be announcement day, X day, and dividend payday?
Yeah, we did pick a date internally. We haven't announced it because it want to make sure the portfolio is stable. Right now, we're targeting the second week of November. So declaration will be, we usually declare on Tuesday, but November 11th, Veterans Day. So we'll declare that Monday, and then Tuesday, holiday. And then Wednesday is the record date, and then we usually do the payment date on the Thursday.
Okay, and then going forward, since there's...
Oh, I'm glad he explained that, because I would have been like, oh, it's on Mondays, and then have to change it. So it's going to declare on Tuesdays normally. That's nice.
Whenever there's not a holiday, it'll be a Tuesday, Wednesday, Thursday?
Yeah.
Okay. And now, will it be based off of the previous week's performance, or will there be a delay?
So that's the reason why we haven't, because we wanted to see what's the implied vol jumps around, right? Especially for these higher vol names. So we wanted to see what premiums that we get. Usually, it will be as I know it's a bit of a controversial topic in the community. We don't want to have NAV erosion, so we will look at what premiums we get, most likely the previous week, and then make a decision whether that level of implied vol is normal to the market. If it's higher, we might keep some of the implied vol premiums that we harvest into the fund, so we have what we call an internal bank. If it's shorter than what we usually get, then we will use up the bank so we can smooth out what the income distribution will have.
Okay, so what he's saying makes sense, but it does make it more difficult if people are trying to predict what their distribution is going to be. So with YieldMax, their philosophy is we're going to pay you everything for the most part, and you can decide whether to buy back into the fund or not. But Howard is basically saying, like, we really just want to keep this at $25. So we'll keep some of this stuff back. And, if it's better, we'll give you more. And, if it's less, we'll pay out from the bank that we've stored up. And I think people appreciate that, honestly.
From the fund.
Okay, so that kind of leads into my next question. I was going to ask, do you have like a target yield you're trying to pay out, kind of so people know what to expect, or is it going to move with volatility?
We will, because of the bank, we'll try to smooth it out. I will say, this fund will have higher. Okay, this is actually something I want to set expectations for people who are interested in the strategy. Is that I believe right now in our internal calculation, the first distribution annualized will probably be higher than any of our funds that we've launched so far. But it will.
Okay, that's not saying much, Kurv. I'm sorry, but you don't have. I mean, when you compare it to something like SCHD or your savings account, yeah, you are high income. But when you compare it to other things on the market that are comparable to your funds, you just don't have that high of a yield. So, and it's not necessarily a bad thing. Like you said, all of your funds, they launched at $25. They're all $25 or more, and which means you don't have to put your money back in necessarily to fight against NAV erosion, which is nice because these are for income. And that is the pay, like there's a term, like basically you can choose either insanely high income, high yields, and you sacrifice the NAV, or you have a good NAV and you don't have as high yields. Anyways, trade-off, I think, is the word I was looking for.
Be below what the long-term rate is, because we want to step into this cautiously. So where we come out with will not be what the final number is. It will be probably lower than what the final number is. We don't, that I think is one of the things that we are a little bit different, is we don't target a rate, because this is actually where the problem is with a lot of NAV erosion, right? So if your target, say, a number like 30, and the market doesn't give you 30, then you have to return some principal to the investors. And that's where the NAV erosion happens. So, I want to give you an example, right? So you want to distribute 30, 35, right? And the market gives you 30. This is why we have the internal bank. So if we have premium that's in the internal bank, we'll use it to get to 35. But if we don't, we'll just do 30, because we don't want to get into a situation where we give back principal from the fund. If that makes sense.
Yes, that makes a lot of sense. But there's going to be weeks. There's going to be weeks where, let's say, you lose your trades. And generally that is going to overall not be the end of the world, because that means that the share price ran beyond your call strike price and the value of all your shares went up. So in those weeks, you're going to lose money realized in the trades, but overall your value is going to increase. So you'll take that into account. And let's say you don't have a bank yet, let's say, or the bank's just not going to be enough. But since your NAV has increased, then you'd feel comfortable, call it return of capital, as long as you're staying above or real close to that $25 mark.
Yeah. So you'll see. What you'll see is this. You'll see we'll distribute an attractive yield, because it will be higher than any of our existing ETFs, and then we allow the NAV to go up.
Howard, could you, since you're referencing it, just for the people that may not know some of you other, what is the highest yield of any of your other ETFs? So when you say higher than, we at least have an idea of where that might be.
Yeah, I think the highest distributing ETF that we have is Tesla, and that's gone up like 20. In the past, the highest is 28%. So It'll be higher than that.
Thank you. I'm sorry to have interrupt. Please go ahead. I apologize, but thank you for that information.
Okay, so they say like higher than 30%, but no guarantees because the market is fickle, which is fine. Like, you don't want a fund manager promising us things and then it not come to fruition, because I'm going to be like, Howard, you said we're going to get 30% and it's not 30%.
Yeah. So you'll see this. KQQ is pretty instructive about this, which is that.
So this might not be an oldie killer. This might be a YMAX competitor. For me, if it's closer to a 30 to 50% distribution rate, but the price appreciates, then yeah, this could really be something that we look at and compare to YMAX. Because YMAX is also a fund of funds, but it doesn't have the flexibility of changing things in and out. And, you know, YMAX has been pretty consistent, but this is more actively managed. And, you know, if you're going to get a 30 to 50%, and it has price stability, like the NAV stability, so you can actually use the income that you're making to pay your bills, then that is why we're all trying to be in high income ETFs in the first place.
The NAV will rise, and the distribution will be it will be higher than Tech Titans, but we were, for that particular fund with the implied vol, we were at like 12-15% for a while, and then NAV reached a certain amount in which we don't think there's going to be further NAV erosion, and now it's up to 19% distribution. So there was a jump once the internal threshold has been reached. This fund will probably reach that faster. That's the way we do it, because we don't want to erode. So yeah.
Okay, that makes sense. It sounds like you're speaking to a large portion of the community, because we hear a lot where even if people are getting good total returns, if they see their share price dropping, they're getting upset and they're calling names and jumping out. So it looks like.
I mean, yeah. I mean, it's kind of like a dividend trap when the price of it goes down, which, I mean, I'm able to go and look at a total returns chart and go, well, I'm up overall, but, it just doesn't feel as good as like, oh, I can trust this to like be at or around $25 for the rest of the time. So, I am inclined to like KYLD versus, something that is like Defiance before they fix their stuff. Like, I just don't, I don't need that anxiety in my life. So yeah, if they can be like a 30 to 50% consistently yielding product, and they are careful about my NAV, this is a pretty good product, and I'm going to figure out ways and wheres I can invest in this.
Yeah, I
target.
I know, like some folks, this is, and actually, if people can provide feedback also, this actually be great, right? The concept of total return is great, I think, because you have an apples to apples comparison of the performance of an ETF, right? But my understanding is, if you're using these products, you're an income investor, you're using some of the income, right? Or else you would rather have an ETF that never distributes and just reinvests the whole time, right? If you're not using income, right? Total return is a calculation that assumes you reinvest 100% of your distribution back into the fund, right? So if that's the assumption, then you should be in a non-distributing ETF, because then you don't even have to worry about the reinvesting the income, right? I feel that if you're an income investor, you are receiving some income, and then there's some really fancy reinvestment programs where you don't reinvest back into the same ETF, you go into other ETFs. That's actually a pretty genius thing, but you're taking some of the income, so that means you're not reinvesting 100%, so you don't actually get the full total return, which means that if you're getting your principal back, that's actually not a desirable thing if you're an income investor, right? Because if you give me $100, I make $10, and you're using it for living off of it or reinvesting out of it. You want to reinvest the $10, right? If I give you $20 back, you're actually reinvesting $10 I've made and $10 of your own money back into other funds. So the way we think about it is just that if we are able to keep NAV stable, anything we distribute is the money that we made, not the money that you gave us. That's how we're thinking about it.
I think that's how retail investors have been trying to explain what we want in the first place. And yes, I have been sleeping on Kurv as a fund because, I mean, KYLD was distributing 12%, and I know they're good funds, and he's a good fund manager, and I've always had goodwill towards them, but at 12%, I may as well be in SpyEye or JEPI or JEPQ, something that has more diversity and has less expense ratio. So, yes, this is the first thing from Kurv that I've been interested in, but it's also an potential actual high income ETF that I understand that maybe a 10% yield might be realistic for what's actually sustainable, no NAV erosion type stuff, but at this moment of time, with the amount of capital that I have, I need things that yield more than a 10% annualized yield. So I think, I'm not going to invest in this at this exact moment because there's no history and I have no money. But we are going to keep track on this, and maybe in a few weeks, once we have a few distributions and we know what this is all about, I'll go and look at my rules of 2025, and maybe instead of BTCC, we'll invest in KYLD. Who knows? Anyways, I'm going to stop this here. There's another hour of this. I'm going to share this in the link down in the description down below, and you all can listen to the rest of this. But for me, I need to go to bed. So my mom and two of my nephews came into town. They're leaving Tuesday morning. So we probably won't be doing a Monday morning shopping spree. We'll probably be doing a Tuesday morning shopping spree. But other than that, what are your thoughts on KYLD? And thank you to the 4,014 of you who like me well enough to subscribe to my channel. I really do appreciate that. And more specifically, thank you, Paulette Pierre, Scott Behringer, Michael Holliday, Shane O'Mac, Bill Bryant, Padraig Spalding, BGP Automotive, in my opinion, Jetta, and Omega Werewolf X. Really appreciate you all. You are making this more sustainable for me as a YouTube creator and doing YieldMight. So appreciate you all, and I'll talk to you all later. Bye.